just a few years back, the interest rates were about a third of what they are today. And most of the investors that I talk to, are saying it's so hard to make a deal work based on current interest rates. What's your take on the current situation from a interest rates perspective?
Yeah, no, look, I think it's a total reset. The market has been lulled into a false sense of security with rates being too low for too long. If you look at the 10-year over the past 50 years, the average 10-year has been 5.4%. I didn't check what the 10-year was today. Yesterday, I think it opened at 462. Historically, that's below average. How much are rates going to go down? Are they going to go down 50 bips, 75 bips? We're not going to see a 10-year at 2% again. It's just not going to happen unless there's some cataclysmic global meltdown financially, which nobody's anticipating. So I think that we need to readjust the thought process. The unfortunate thing is that the interest rate policy of the Fed, I think, was based on a misdiagnosis of what the problem in the economy was. I think the Fed was making the assumption that the employment market was overheated when actually it was just undersupplied. And you raise interest rates the way you did, realizing that only about 20% of the U.S. economy is highly correlated to interest rates. So you look, 35% of the U.S. economy is healthcare and education. I don't know any high school kid that said, oh, I'm going to put off college next year. I'm going to wait for interest rates to come down. Or somebody who said, hey, I'm scheduled to have open heart surgery, but let me wait till the 10-year hits 3% before I go in, right? So these parts of the economy are still moving forward. The interest rate policy has disproportionately adversely affected the real estate business. It's really remarkable what's happened, but I'm not expecting interest rates to go down substantially. I think they may come down a little bit. But this is what they should be. We went through a period where rates were just far too low for too long. And if you think about it, the thing that caused the housing bubble to burst in 2006 was because rates were too low for too long. So, low interest rates are great for real estate, but create problems down the line. And I think today we're more in line with where interest rates should be in a normalized world, as opposed to thinking that, they're going to go down 200 basis points. I just don't see that.